Wow, Elon Musk might buy a TikTok. Auto loan delinquencies are rising dramatically. Why did markets do so well in Q4, though? And could there be an underlying warning in that? Some answers specifically on that. And Jamie Dimon's comments on Bitcoin. Spoiler, they're not good. But Microstrategy did just buy the dip, so we'll analyze when they bought, how much they paid for, and what their average cost is of Bitcoin right now. We'll also talk a little bit about the California wildfires, not too much. We'll talk about Apple's sales decline for iPhones, and an update on Greenland. You won't believe it, but there was actually an act just introduced called the Make Greenland Great Again Act. All right, let's get into this. So first, on today's Meet Kevin report, news that makes you money, Elon Musk might be buying TikTok. At least this is talk that is circulating amongst Chinese officials who are mulling that if the app is truly officially banned, the Supreme Court upholds the TikTok ban and the app has to be taken down from app stores. Elon Musk might be a candidate that they would be interested in selling the app to. Now, it's unclear if this would be a competitive process and companies like Google or Meta or Microsoft could end up competing to try to get control of TikTok. But a lot of people see this as a potential boon for Elon Musk, as he would then potentially be able to collect more advertising revenue than he's able to collect right now over at X. A lot of people say that premium subscriptions are useful for actually generating some income and keeping the lights on, but that advertising revenue is still a lot slower than what it used to be, though advertisers have started coming back since, as Donald Trump and Elon say, everybody is coming. Some people are coming multiple times. Yeah. Anyway, some also say that XAI could be a big beneficiary of the TikTok data, which is what the United States courts and lawmakers are afraid of, that China has control of too much of our data. See, a lot of people say that the reason TikTok should be banned is that China collects your contact information, your watch habits, what you're doing, maybe even your location. And all of this is then stored on Chinese servers, which could then be used by the Chinese government, potentially either to market their stuff to us or to somehow influence us, or maybe even convince us of certain things that might be contrary to fact or contrary to the opinions of our government officials or whatever. Now, obviously, the big counter argument to that is, hey, it's free speech. Who cares? If China wants to peddle me misinformation, let me hear it and decide what I believe is true. Other people say that the information could just be stolen, like all your contact information, your buying or click habits, what posts are you interacting with, basically a whole profile on you could essentially just be hacked by somebody else. And if it's hacked by somebody else on a Chinese server, then you lose all that data, whatever. So far, though, not so much delving into the reasons for the TikTok ban, just trying to remind you of that. Right now, there is talk via Bloomberg that Chinese officials are mulling selling the app to Elon Musk. They say that a lot of ByteDance employees actually have a positive impression of Elon Musk. Some say that TikTok could be worth as much as what Elon Musk paid for X, which would be around the low $40 billion mark. Elon Musk, obviously, with the latest rise in Tesla, has plenty of money to do that. In fact, if you look at Tesla stock, by the way, it really rallied into the close today. You got it was red 95% of the day, and then going into the close, you had another 2% bump, plus potentially another 2.5% bump in the after hours. Some people say that could be due to this potential for Elon to get even stronger with the acquisition of TikTok, because then not only do you have a written text platform, but you also have a video platform, which is something Elon's been struggling to really get to catch on the TikTok platform. So it could be something that he very much desires. For China, this could also be another inroad to Trump, as it would be seen as a good gesture and negotiation leverage for, the head of Doge or the co-head of Doge. Anyway, this is very interesting, and this is pretty new news just out, so it just aligns with our Meet Kevin report. Although today's Meet Kevin report is coming out a little bit later, hopefully you enjoy this breaking news. Okay, so getting close to Donald Trump obviously matters, and it's worth noting that getting close to Donald Trump matters so much that even Harvard is now threatened by Donald Trump with scrutiny over their endowments, to the point where they just hired the lobbying firm that's linked to Donald Trump's chief of staff to basically lobby the government under the Trump administration. Interesting. That's how it all works. You got to pay people to stand in the lobby, and then you get favors. Anyway, the automotive market, some interesting things here. Subprime auto loan borrowers are starting to struggle. We've obviously seen used car values plummet over the last few years, but there has been a noticeable uptick in the number of 30-day lates as of November data just out. Prime delinquencies only rose about 3 basis points, but we're up about 35 basis points just in November on 30-day lates. Now, if you annualize that, that means 30-day delinquencies are up at an annual rate of about 4% for people who are subprime. And this is the first time we've seen the level above 10 total percent since January of 2024. So a lot of people are concerned that this is a trend suggesting that it is becoming even more difficult for those who with moderate to lower incomes just to get by. Carvana, by the way, comes in at the worst with a 13.3% delinquency rate amongst those subprime. And amongst prime loans, we're also seeing an increase at CarMax, Ford, GM, and Ally. But CarMax has the worst with prime delinquencies at about 3.23%. As far as macro numbers, some are complaining about the potential, specifically UBS, some are complaining about the potential for more gradual or slow on-ramps to tariffs. This was specifically UBS. This is kind of critical because if you think about it, a lot of people think that these tariffs could come in sort of a one wave. And then let's say the tariffs hit at the end of January. Then we get a bump in inflation. Some people think maybe in March or April, and then a year later that bump in inflation is gone. But there is this potential risk UBS is now citing about potential gradual or slow on ramps of tariffs, which could then lead inflation to stretch out over a longer period of time, just consistently seeping more inflation into the economy. Those are just some fears now, and they sort of contribute to the continued Donald Trump uncertainty that markets have really been exhibiting mostly here since December 18th. That's when we started to see markets get a little bit more fearful. Obviously, we did have a very nice recovery in the market going into the close today, but we're still at a level of 27 on the CNN Fear and Greed Index. We've been at extreme fear on the 125-day moving average for the S&P 500. Stock price strength is at extreme fear. Stock price breadth is at extreme fear. Put call volume is at extreme fear. The only thing that's at green is junk bond demand, which signals that people think, hey, there's still a low risk that companies are actually going to go bankrupt. But markets are starting to turn a little bit, and obviously we've seen some of the numbers start turning. I mean, look at, for example, some people are really into small caps. They're down 11% from their peak, for example. Those are often seen as a more risk or high risk asset, right? Just like Bitcoin down 12.5%, almost aligned there with IWM, right? Tesla's 15% off peak. It's counting them down to about that 414 line. Critical line there at 414. And I send out the lines that I'm paying attention to every single day in the Meet Kevin Alpha report. If you haven't gotten that yet, it's totally free. Just go to meetkevin.com and scroll to the bottom. You should really sign up for both, the Daily Wealth and the Alpha report, but totally free. I send those every day the market is open. Daily Wealth, typically every single day. Sometimes I miss a day or two, but I try my best to get that out every single day. Apple, though, down 9.5% from peak. Palantir down 22% just over the last few weeks. And Opendoor seems like it's plummeting to bankruptcy. It just lost its $1 billion market cap level. Ouch. Obviously, tougher environment to be flipping homes, but not my recommendation right now to flip homes. You can buy good deals, but flipping, you generally want to do that in a market that's rocketing for real estate. Anyway, New York Fed inflation survey indicates that markets see inflation expectations as barely moving. This is seen as less worrisome than some have argued. And insurance companies right now are seen as a potential culprit of stock selling pressure. A lot of people originally think that insurance companies will go sell bonds because that's usually what they do. But stocks have done so well over the last few years that some are saying insurance companies might be prone to selling stocks as opposed to bonds, mostly because treasuries are yielding close to 5%. They've lost a lot of value. And stocks are up a lot. So sell the winner is what some are saying, and then keep that 5% yield or sort of roll into more of that 5% yield as, between now and when you actually have to start making payouts. Companies and insurers like Chubb and Progressive have already dropped about 4 to 5%, likely more in market cap loss than the actual loss that's expected for them. But obviously, you're seeing the markets react already because of the fires. California is still on fire, and we've got some of the craziest Santa Ana winds right now. It couldn't go flying today because we've got winds gusting up to 30, 40 miles an hour, and they might even get worse over the next few days, which would be really bad for that potential reignition concern for fires. And we've talked about over the weekend, specifically yesterday, for the potential cause of the Palisade fire. So if you haven't seen that yet, make sure to watch yesterday's Meet Kevin report. Jamie Dimon was interviewed on CBS. He says it's not a surprise that Donald Trump won, that people were angry. He says he's not against crypto, but Bitcoin has no intrinsic value. You should have the right to use it like you have the right to smoke, but I don't think you should smoke. So he's kind of like, yeah, no, not interested in Bitcoin. I think it's a Ponzi is what he says. He says sex traffickers and ransomware companies use it. Okay, so kind of negative there. Anyway, that doesn't change the fact that you've got Microstrategy buying the dip on Bitcoin, which we'll touch on in just a moment. Jamie Dimon does go on to say some things that I agree with, such as a lot of people, especially those in that lower 25 percentile of income right now, are going home today to more crime, more drugs than ever before, and they're dying 10 years younger. They're not getting the skills that they need to survive in this economy, and that's why you've got this growing gap between the rich and the poor, and then it's really becoming on governments to educate better. By the way, I'm a big fan of that. When I ran for governor in California, I ran on the premise of future schools and really renovating and sort of updating our entire school systems, getting rid of this gridlocky nonsense that you get with schools and the lack of progress in our education throughout the entire country, but specifically California. You're the largest state in the country. You're the fifth to sixth largest economy in the world, and you've got schools that are in the bottom 20% of schools in the state, which is just pathetic. Anyway, going on a little bit on some of the data, there are some like UBS as well, who was talking about these rolling tariffs being a problem. They say that usually when bond yields peak up, stocks fall. So far, that hasn't happened just yet, but some people say this 10% sell-off we've already had is a dip opportunity because of the bond market. Maybe we do have PPI and CPI tomorrow as catalysts. I'm sorry, PPI tomorrow and then CPI the next day. Usually PPI comes after CPI, so it's interesting that it's a little out of order right now. But PPI will be out tomorrow. We're looking for 0.3 on the core, up from that 0.2 prior, and 0.4 on the non-core, matched with the prior. So we'll see where that comes in. It is expected on a year-over-year level to pop up from 3% headline to 3.5%. And not just that headline number, though, but also core, 3.8 versus 3.4. So some of those low inflation numbers we've been used to are starting to tick up again. And that is leaving, well, the bond market also nervous. SocGen, by the way, says that there is, and this is potentially an underlying risk to the economy. SocGen says that households and businesses have been bringing forward demand to beat tariffs. And it's unclear if that's going to continue in Q1 and Q2. In fact, you're seeing this rising level of companies now saying, hey, we're demanding people go back to work in office. Multiple companies, whether it was JP Morgan or Amazon, or I think you even had Toyota for their HR staff. But anyway, I think they just had an announcement today. But multiple companies indicating, hey, yeah, we need you to come back. Some people say that, as that pull forward of demand drops off, people stop spending as much as they had in Q4, businesses and people, because, now we're ahead of tariffs, basically. The holiday season is over. All the reasons to spend now are going away. Hey, what happens in Q1? Well, nobody knows. Now, what I think happens is between now and next Monday, you probably want to consider, if you're going to buy an electric vehicle, to do it, because one of the first executive orders Trump might sign might be killing that EV tax credit. So it could be a little sales push for Tesla there. But anyway, my take on this is that markets, I don't really know, obviously, exactly what's going to happen, but my take on this is that markets are in what I call the assessment phase. I was talking to course members about this morning in the Course Member Live as we were reviewing some of the early market trading. And really, the way you look at this is we started with bullish hope for Trump. We moved on to euphoria for Donald Trump's win. Now we're at the assessment phase, which is, okay, what is the evidence for Q1 going to tell us? A continuation of really strong jobs from Q4 and strong spending, or slower than expected? Macy's, for example, cuts their sales forecast. Apple cut its sales. Data coming in for the iPhone indicates that iPhone sales are down 5% globally year over year, which is pretty substantial decline, especially since the entire smartphone industry grew 2.4%. A lot of people say that's because Apple's catching up with AI and that they're really behind. And smaller companies like Xiaomi and Vivo, Xiaomi from China, obviously, are really seeing a pick up in sales. And so maybe there's more competition, more innovation happening elsewhere. Mark Zuck, for example, slammed Apple for a lack of innovation. But others say, hey, this is just a buy the dip opportunity. Take all of that uncertainty and, your assessment phase or whatever you want to call it, Kevin. It's buy the dip opportunity. Palantir's on sale, 22% off of peaks. Hey, why not? All right, very well. We'll see what ends up happening, and obviously I'll be reporting on it every single day. Now, Microstrategy actually ends up slamming bonds, which is funny because they basically fund the whole company out of convertible bonds. But anyway, he says that bonds, like treasury bonds, are toxic, mostly because of fiscal debt, right? That's why he's making a contrast between his bonds and the government bonds. But anyway, he says buy Bitcoin instead. Why? Because you'll get rich, do the right thing for your family, your country, your investors, and adopt Bitcoin. Okay, we already know Michael Saylor is all in Bitcoin maxi, super bullish. But MicroStrategy did actually put their money where their mouth is. Between January 6th, J6, and January 12th yesterday, they did buy $243 million of Bitcoin, which they announced today in a filing. This was done at an average price of $95,972. They now hold 450,000 Bitcoin with an average price of $62,691, worth about $42.3 billion, and they've got a market cap at MicroStrategy of about $80 billion. So you're still selling for about 2 times, which is fine. That's actually usually pretty typical to see as sort of a 2x book valuation. So that doesn't sound unreasonable. Obviously, more the risk is, what happens if for whatever reason, Bitcoin, whatever, fell below their average price, or worse, their average cost of debt as that becomes, comes due and payable. That would be the bigger concern. But that also may never happen, may not be a concern. Robinhood's going to pay $45 million in penalties to the SEC for failing to report suspicious activities on time and not preserving electronic communications. Regulation around finance is really, really hard. So usually companies look at this and go, whatever, man, cost of doing business. And honestly, I doubt Hood really cares. They're probably more happy that this is over than anything else, but it's a $35 billion company. Okay, so what's $45 million divided by 35, 1, 2, 3 billion dollars. Yeah, this is like 0.001 of a punishment. So let's say you have $100,000. This punishment, to make it equivalent to you, would be the example of you having $100,000 net worth and getting fined $128. That's less than a speeding ticket, man. Not that I know. I've never gotten a speeding ticket. Honestly, I don't even speed anymore these days. I feel like I've gotten old. I can't speed anymore. It's not that I can't. I can. I just don't. I have a little radar detector, and the suction cup came off when they did the tinting on my car. Well, they took it off. Didn't come off. They took it off. And I never reinstalled it because I'm kind of like, I don't care anymore. Anyway, that's more on me and not about Micro and Robinhood. So let's just keep going with this. So California, there's the latest on California is really just about home design and how people are complaining about how 1950s and Spanish style construction really have a lot of roof vents or E-vents that can allow ultimately, embers to come in. And you have to think about it when embers come into a roof. It's really bad when you have a comp shingle roof and a bunch of vents because the inside of your attic is literally like a tinderbox. That is some of like the most dry, kiln heated wood that you just heat up and dry out all year long, or since the property is really built. It is the most delicious for a fire to just chew up. So, yeah, there'll definitely be some changes in terms of development standards for real estate. Some people were asking me this morning, they're like, hey, is development going to balloon and should we buy construction companies because of the fires? Okay, well, let's talk about that. One sec. You really have to look at this on a nationwide basis. Obviously, rents are skyrocketing in Los Angeles, and contracting prices are going to skyrocket in California in about a year or two. Architectural prices will start skyrocketing now. And rents are blowing up because, a lot of wealthy people lost their homes and they're like, please just give me a place to live for the next 2 years. And so they're willing to pay double what certain rents are listed for. So, yeah, you're going to see some rental inflation, which isn't great. But when it comes to a nationwide, will sort of building stocks or whatever go up? Maybe, but it depends on what the whole economy does. Just because you want to rebuild 20,000 homes in California doesn't really put a dent into what the country builds on an annual basis. We usually build around 1.5 million homes. So if you think about that, that's like, a little more than 1% of your housing stock in California that is being rebuilt because of the fires. So it shouldn't make much of a dent on a nationwide level, especially if there's a nationwide decline. It would just sort of help soften that decline a little bit in new construction. In terms of politics, you've got J.D. Vance saying protesters should not be pardoned. Johnson says that there should be conditions attached to fire aid for California due to the gross negligence of leaders in California. And a lot of people were talking about the Fetterman and Trump alliance. People saying that it's a really interesting sign that Donald Trump says Fetterman is not a Republican or a Democrat. He's just a common sense person. People think that Fetterman could actually vote towards some Trumpian policies and sort of give him more strength and avoid some Republican gridlock that he could face when fighting some potential hardliners in Congress. Some of those hardliners might come out when the SALT tax benefits come out and sort of the debate around these. If the 2017 tax cuts expire, though, it's worth noting that the SALT tax deductions, the state and local tax deductions, which basically let you say on your federal tax return, hey, look, I paid all this money in state taxes. Can I have a write-off for that? That's limited to like $10,000 now. Some people want it to double to $20,000. But if that expires and the 2017 tax cuts expire, you'll be able to write off unlimited amounts again. So a lot of people were like, even doubling it is better than it going to unlimited. But obviously, yes, SALT tax benefit more blue states like New York and California than other states, though it's worth noting that states contributing to the federal income, like the income of the U.S. government through income taxes, some of the highest contributors are California, New Jersey, New York, compared to some states like, Mississippi or New Mexico, who are, Mississippi takes Mississippi pays into the system $1.19 for every dollar they take. New Mexico only pays in like 88 cents for every dollar of federal aid that they take. Florida pays in $5.78 for every dollar they receive. Jersey pays in $6.28 for every $1 they receive. California pays in $5.03 for every dollar they receive. So, there's also that sort of debate in terms of like donor states versus recipient states. But, it's kind of interesting to pay attention to see this. I honestly imagine that as part of a larger tax package, yeah, you'll get some more benefits for the SALT taxes, but you'll also get an expansion of these 2017 tax cuts and maybe even corporate tax cuts in there, which that would be really awesome, especially for the stock market. We'll see. When it comes to Greenland, Prime Minister of Greenland says they're seeking opportunities to, quote, coordinate with Trump. And a congressman from Tennessee actually just introduced a 2-paged resolution saying, let's make Greenland great again, which is just a resolution, which is basically meaningless. But it authorizes, not that Trump really needs the authorization, would authorize Donald Trump to start negotiating with Denmark. Okay, very interesting. So a little note on sort of like a daily wealth note. Sometimes, since I'm a big fan of chaos theory, which is basically when you create chaos, you are able to take control of that chaos. Sometimes it is possible to take that chaos a little bit too far, and then you truly have chaos. That I believe is what has happened in my studio. I am upgrading the studio to be able to, go 4K live streams, 4K videos, and all this stuff. Mostly because somebody left a comment saying I was antiquated for not doing 4K, and it sent me off a cliff. So anyway, but I never read the comments. Anyway, that. Yeah, that was a little poopy doopy, and so it's gonna take me, let's just put it this way, a lot longer than I expected to put this all together. Hence the mess here, but I'm working on it, so it's getting there. And yeah, there's just some new equipment problems, and otherwise, the good news is it really gives you more opportunity to optimize. So when you do chaos theory, and even if that chaos turns into like hell theory, you just give yourself the time, get through it, do it all the way it should be done, improve it. And I'm telling you, the things that I'm going through are going to make me even more efficient than I already am. I mean, there's so many little inefficiencies that I was finding from, going from 4 different computers and 5 different monitors for those computers to 1 monitor that has all of them built in, which is really incredible, to faster switching protocols, to better live streaming opportunities with overlays or comments or whatever, or shortcuts. Some really cool things we're setting up. So I have to do a full breakdown video on all of that when done. And as far as the dad joke of the day, it's not funny. It's just not funny, but I'm going to do it anyway. What sound does a witch's car make? Broom, broom.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.